I think the way we're going to set this up, this conversation, we're going to talk a little bit about some of the near-term issues for Canada's economy. Then we're going to talk more about some of the sectoral, structural issues that we have to deal with over a certain amount of time.
I was told you have a bunch of cool charts that I need to speak to.
There's a bunch of cool charts. We also want to get your Blue Jays Yankee forecast as well.
Okay, I'll do my best.
Maybe we'll get to that at the end, yeah. So Stéfane's prepared a bunch of great charts here for us as well. We'll get to that in a little bit. But first I want to hear about how you're thinking about the short-term issues for the economy. We have to address the elephant in the room here. I think the tariffs are quite a significant impact. Second quarter growth was hit pretty hard.
Yeah, and when you compare Canada to the rest of the world, the effective tariff on our country versus the rest of the world is relatively low, at less than 5%. However, at the margin, that 5% comes on top of the suboptimal policies that were deployed over the past decade, and that's why it's hurting at this point in time. So uncertainty certainly doesn't help, Erik. But I am hopeful that our policymakers have seen the light on that one, and as Mr. Poirier says, we will move forward.
Great. Let's before we get on to some of these more structural issues that we're facing in the economy, in these great charts, let's talk about the Bank of Canada just quickly. Yeah. What's your outlook for the bank right now? They're in a tough position. We have core inflation that remains quite elevated. The pressure on the economy is clear. Exports are taking a large hit. Investments not in a great spot. What's your outlook over the next year for terminal rate for the Bank of Canada?
Well, the Bank of Canada is actually questioning its own core measures, Erik, as you know. So headline inflation is closer to 2% or below it. So if there's one country that still has room to cut with credibility by keeping the inflation target at 2% or less, it's Canada. So they'll be cutting rates at the next meeting, for sure.
Yeah? And how low do we go in Canada? What's terminal for you? You see around 2, 1.75?
You're jumping ahead of yourself because I need to see the budget on November 4th, and then we'll have that discussions after the budget.
That's right. That's right. So let's move on here. We want to talk about some of these charts that Stéfane's prepared for us here. So maybe if we can bring those up.
Actually, Erik approved them.
That's right. They got a stamp. So this is an important chart. This is one that you've prepared this. We've seen this for years. This comparison between the U.S. and Canada. I want to just talk about the structural issues that we're facing here.
For people in the room, the blue line is the U.S., the red line is Canada, right? So Mr. Poirier said there's a perception by investors that nothing ever happens in Canada. Can you blame them when you look at that chart? We've had no real capita GDP growth for over a decade, so clearly nothing's happened over that decade, Erik. So I couldn't blame investors that were shunning investing in our country under these circumstances. So people have said, we've got great people in this country. It is true. But what really impacted us negatively over this past decade, which I call the lost decade, by the way, is your following chart.
So just before we move on to the next chart, we have to address that the population growth has been very high, right? So this is a major reason we have this. It's one of the reasons why there's this big divergence in terms of this trend here. It's 10% growth over the last half decade.
No other country comes even close to us in terms of population growth. So we were able to attract tremendous foreign talent to Canada. So that should help us down the road. But it's not enough, because we've had this discussion before. That was just not a function only of population growth.
That's right, that's right. Let's move on, we can see.
Oh, there you go. You got the flags.
The flags are up.
There you go.
Here we go, this is productivity. So obviously we have a serious issue with that, and the Bank of Canada has flagged this as an emergency situation at the beginning of last year. It's often discussed.
So I cheated on that chart because I said productivity, but it's actually real business investment. So if you attract foreign talent to your shores, make sure that you have the ability to attract business investment. So when people speak to lack of productivity in Canada, they don't realize that we've had no business investment for the past decade. So that's the primary reason why our per capita GDP has been lackluster, right? As an economist, GDP is a function of capital, productivity, and labor. Labor's been great, but this is where we've gone wrong on the ability to attract private investment. You can compare that with the Americans. It's quite a divergence.
So there's a couple noteworthy points to make about the divergence here, where this trend begins. It's around 2015. Two major changes there. The Liberal government was elected, as well as the oil price collapse. What do you think is the more significant trend that's driven us or kept us flat in terms of?
I'm not going to make a political comment, but I just answered it.
Fair enough. All right, let's get into what you're looking for in terms of what's coming up. I think this is a major moment for Canada. Is this budget upcoming? Carney's first budget.
So Erik, despite these, the two top slides were gloomy charts, I'm the most optimistic in a decade about our economic outlook. And the biggest change came in April when Mark Carney replaced the former prime minister and made this throne speech that should be very enticing for me as a Canadian anyway, as an economist, pledging to be a G7 leading economy, an energy superpower, reform or reduce regulations, innovate, optimize the immigration policy. This is something we haven't seen in quite some time. So it's a major break from the previous decade.
Now, I think we should talk about regulation as well. There's a lot of push, as you've suggested, in terms of reducing some of the regulations that may have in the past prevented some of the investment.
So Mr. Poirier was making a sales pitch on Canada, saying we are an energy superpower, we have great people, we have a comparative advantage in many things. But you can undermine all these comparative advantage with regulations. So made in Canada suboptimal policies. And one of the best illustration to show you is probably the number of regulations that the federal government added over the past 15 years or so. We now have more than 320,000 regulations impacting our corporations. So can I blame corporations for not investing under these circumstances? In manufacturing alone, we should be an industrial superpower. Everybody wants to be one, but we have the ability to be one. But we've added more than 100,000 regulations to our manufacturing sector. So the reason I'm optimistic is with the throne speech, and just after the throne speech, Mr. Carney says, I'm ordering a review of all these government regulations. You see, it doesn't have to cost you much with the upcoming budget if you attack regulations. It's one of the neat ways where you can kickstart investment in the next few quarters.
Right. So this is one of the ways that we can do this on a less expensive manner. Let's talk about some of the more expensive parts of this. Economists that we survey at Bloomberg see a deficit upcoming of at least $70 billion. That's deeper than what Trudeau's government was running. And in the near term, the PBO has suggested that the debt to GDP ratio on a net basis will rise. This is an important shift for investment, but it may also be an expensive shift. So can you maybe talk about how you're viewing the cost of this?
Yeah, so don't give me the survey stuff. The real number on the deficit is $100 billion. So for the people in the room, don't freak out. It's about 3% of GDP, so it's still half the size of the U.S. deficit. So it's how you go about it. What do you do with that deficit? So I think $100 billion is probably the best figure to work with, largest deficit in quite a while. But I believe that this budget that we're looking at is the most consequential budget in a generation, right? Is how you convince investors to keep with the Canadian thematic, because investors own 40% of our bonds, right? So you don't want to spook them out with the budget. So this is why this budget on November 4th is so important. That's why you and I need to speak about the Bank of Canada after that, because it will be a stimulative budget, but there's got to be a big investment component that encourages investors about a future outlook.
Right. So comparatively, our balance sheet as a country on the federal level is in a much better spot. And at this point, if you started to, use some of that to fix some of these sectoral problems you've suggested here, do you think there's appetite for that when you talk to investors, when you talk to other economists? Do you think we're shifting in terms of how we feel about, for example, balanced budgets? That was always what we were interested in.
It's a great question, Erik, and to me, the important part on that is if you're going to show a deficit of $100 billion and have nothing, and introduce some measures into 2026 and not be able to grow business investment in this country, you're going to have an issue. Investors will say, you know what? It's not looking good for Canada in 2026. So this is why I say this budget is not just about showing the size deficit, $100 billion. It's how do you promote higher potential GDP growth in 2026? And that's been the missing link. But we need business investment to grow this potential. So I'm optimistic that Ottawa is serious about improving that outlook.
So if we look at the fiscal track moving forward, if we go from a certain if we look at where we are in terms of growth right now, we're at for the rest of the year the bank's saying like 1%, for example. If we can get the growth rate back up, some of the cost of this is going to be offset in the long run if we can actually increase the potential of the economy, right?
It's all about
our way out.
You're so right, Erik, and it's all about that because even from a Bank of Canada perspective, you don't know what your potential is at this point in time. So with the budget, you'll be able to fine-tune that estimate, and then that will drive monetary policy. So that's why I'm willing, with conviction, to give you at least one more rate cut by the Bank of Canada, but I'm not sure that they can cut in 2026 if that budget is as consequential as I think it will be, because we will stimulate growth next year.
Right, so your view is we're going to get another cut in October, but then we need to see, the bank's going to want to see what's in the budget, just like the rest of us in terms of how we're going to act moving forward, right? Let's talk about defense here. This is a major part of what the government's planning. Maybe talk about whether this is, how much bang for the buck do we get when we start investing in defense? Maybe talk about the multiplier of that.
Well, some people, the multiplier is up for grabs. I'll tell you what the biggest multiplier, I think, where it lies. You can convince our American friends to say, like, you know what? We haven't been really serious about, playing a role in NATO for the past few years. Now, by committing 3 to 5% of GDP, some of that will go to American suppliers, some of that will be to Canadian suppliers, but this is how you make your pledge. And this is where the multiplier comes from, Erik. It's improved relationships with Americans. That is a multiplier that is very hard to seize at this point in time. But I do strongly believe that this commitment is a game changer with our relationship with Washington. Great.
So this is just, we're getting back to, comparing what's gone on in the past here. There's a lot of fear about, as we mentioned, balanced budgets. It was a preference for a lot of folks. A lot of that is from what happened in the 90s. You could see from this chart, we have our interest charges relative to revenue are actually, quite low relative to that period in time. You see there is this room. We have the fiscal room to do this, right?
It's the, again, this is, we do have some fiscal room when you compare Canada to the rest of the world, be it on a deficit part or a net debt to GDP. Mr. Poirier spoke to that. So there is some room, but we should not waste it. This got to be in growth-enhancing strategy. Again, I come back to that all-important budget on November 4th.
Right, so you're going to be watching closely, and I think investors are going to be watching closely as to how they plan in the future our finances as well. It's not just about the outlays themselves and the size of it, it's about where we go over the next 5 years.
Yeah, and Erik, the way to unleash growth in Canada is that we are an energy superpower. I mean, Mr. Poirier spoke to that, but we've been stranding these assets by not knowing whether or not we could exploit them down the road. And if you're going to reindustrialize, and the U.S. wants to reindustrialize, I can find no better partner than Canada. We have plenty of energy, and we have an energy grid that is not only cheap. Our electricity prices are 70% below the G7 average. Our price of natural gas is 80% below the G7 average, 50% of the cost in the US, and we have one of the cleanest electricity grid in the world. So if you are going to leverage this type of comparative advantage, I can only be more optimistic on Canada. For the first time in a decade, the federal government says, let's leverage this thing and show our American friends that we can actually reindustrialize and be part of this whole reindustrialization process that's taking part within North America.
So let's say, just quickly, we're going to have to finish this up quickly. I know we could talk you and I could talk for 40 minutes. But let's talk about what we're seeing so far in terms of comparison of what's going on with the stock markets.
Yeah.
there's clearly something going on here in Canada.
So I knew you were going to ask me about this, so I said, Stéfane, how can you be so optimistic? Let me prove it to you. If you look at this table here, Canada is actually one of the best performing stock market year to date. So under these circumstances, if you're up more than 20%, clearly I'm not the only one that's getting more optimistic on Canada. I think the markets are speaking and say, well, we're optimistic on this upcoming budget and that we will deploy the growth that we should have had over the past decade. Again, we're coming off a lost decade. Again, these policies being deployed make me a lot more optimistic.
Great. So we're going to look forward to November 4th. That's going to be a big moment. We'll be talking to you then. Thanks very much for coming out to talk. And so Blue Jays, Yankees?
Blue Jays, definitely.
Great. Thanks very much, Stéfane.
Thanks, Erik. Thanks for having me.